Good evening, good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for September 14th, 2008. AccendoTraders.com, effective trade plans delivered daily. Each weekend we have our routine that we go through to put our trade plan in action, and we want to make sure we're on the right side of our trades. We want to know what news is coming down the pipes. We want to know what some of the experts are saying about the market to see, to get a gauge of maybe some of the market internals and what's going on. You want to check our sectors for trends and see which ones are going up and down. We always scan for new trades and set alerts for our new trades. Most importantly, we want to make sure that we have time to spend with our family. So this week, when you start off, you look at it and you say, Dow's up 200, S&P's up 9. You don't really see what a week this was. I mean, this really was a week, to the point that I changed the format a little bit here. And really, we're just going to talk a lot about this corporate headlines. I mean, we started the week off with the Freddie Mae Mac takeover by the government. Then Lehman Brothers came into question. They dropped 77% down to like $3, and now they're looking for a buyer. Actually, what happened was Lehman Brothers pre-announced their earnings and gave a plan for how they were going to survive, and the traders said, we don't like your plan. And so now they're looking for a buyer, and at the close on Friday, there was talk about Bank of America, and then later in the evening on Friday, it was Bank of America, some European banks. There were a group of organizations and companies looking to go ahead and put in a bid for Lehman Brothers. So that certainly was interesting. And then similarly, there was some concerns over AIG about whether or not it has capital. And tied into that was Washington Mutual. But Washington Mutual does have enough capital. They do qualify for how the government rates their the company. It's a system called CAMEL. Don't ask me what that all stands for. It's capital, assets, management. Don't remember what E&L stands for. But so Washington Mutual has a capital, but it's still under scrutiny. Then the European Union downgraded its economic growth forecast, which is kind of interesting because obviously last week and last month we were talking about how our GDP was being actually raised, and it was coming in higher than what was expected. A lot of the retail numbers that came out on Thursday and Friday were very weak. And then we also have the auto industry testifying in front of the Senate regarding government loans to meet these new fuel standards. And of course, late Friday night, early Saturday morning, we have Hurricane Ike. I mean, that's a lot. I mean, even though we didn't have a lot scheduled, we ended up having a lot really going on this week. And as far as Hurricane Ike's talking about, you can see that oil ended up down. And that's despite the fact on Wednesday, OPEC said that it's cutting back its production, and the crude inventories was also bullish for oil, and yet oil continued to go down. I kind of wonder if it was in anticipation of Ike. And oil actually reached $99.99 on Friday. We broke $100 on Friday. But obviously we do by now know the devastation that Ike has handled. So we can expect to see oil, kind of raise from here, but we'll talk more about that. I know that here in Atlanta, I was, at Kroger's, and the gas station on Friday, this is Friday afternoon, there was a huge line. I guess people wanted to fill up their tanks before, the potential price gauging started. Of course, the government has come out and said that they're going to watch that. So, wow, we're going to talk more about that, but where are we going for next week? First and foremost, we've got the FOMC policy statement next week. And, that's important, but we also have some more earnings that actually come back into play. We got Goldman Sachs next week. We got Morgan Stanley coming up this week, FedEx this week, Oracle this week, Best Buy this week. I'm putting Darden restaurants on here only not because they're huge, but to say we do have still a lot more retail and restaurants. We do have several reporting this week. Don't think they're going to have that much impact, but I wanted to let you know. So not a lot going on tomorrow, but coming Tuesday, I know Goldman Sachs Tuesday, Best Buy is Tuesday, and we still have our split plays. So with all that and so much more to talk about, let's go ahead and take a look at our sectors. Okay, so as we begin to look at our search of sectors, we're going to continue our trend for the last 2 weeks. And now this is the third week where we're not breaking it down sector by sector. We're really going to talk about some sectors that are at the crossroads. First one up is agriculture. You can see it came down. Last week we talked about what will happen when it gets down here to 500. Well, it bounced. So want to see if agriculture, POT, MOS, want to see what they can do. Next up is energy, another one that came down here to the 500. Letting it load here. And now it's coming back up, so we want to see what it's going to do. And obviously, energy, oil and gas here, which is next, that has a lot to do with how the market is going to react to Hurricane Ike. So here's one that's already coming back up to the 500, running to the 50. So really, all of these have a lot to do with how the market is interacting with Hurricane Ike. Here's metals, and I want to see how it's going to react. Seeing if it's going to break up here to the 500. It was great support. Now will the 500 be resistance? Next up is steel and iron, in the same, obviously going to be in the same category as metals. It's already to the 500, so will we break higher or run up to the 50? Watching that. Next up we're going to be watching is gold, and gold trying to make another run back up to the 500. Failed at the 500, made new lows, so let's see what happens as it runs up this time. Also, just to see what's going to happen with the Lehman Brothers situation, and I want to see what's going to happen to the brokers. Now you can see they were heading down. Don't know how the market's going to react to the again to the Lehman news, so want to check that out. A weak sector that I'm looking at is internet, and I want to see if it's going to continue down. It found a little support here, but I want to see where that goes. And I also want to check out shipping. Shipping's also showing some weakness, and so I want to see what happens there. And the final thing that I'm going to look at is really going to be utilities. And with this, I'm really looking to see how utilities like energy, like oil, reacts to Hurricane Ike. Okay, and now it's time to go to our final portion of our video, and that's our education portion. We're using the book Trading in the Zone by Mark Douglas, Chapter 3, Taking Responsibility, Reacting to Loss. And for those of you who are just watching our weekend wrap-ups, last week we talked about those traders who want to take revenge against the market, those traders who think the market has a vendetta out to get them. And the way that these people feel like they can beat the market, the way that they can give a nice right hook to the market, is by learning more market knowledge. They feel like they can prove something. They can overcome the market. They feel like they can stop the market from hurting them. However, again, what they're not learning is how to put a systematic way of winning. They feel like more knowledge is the way to beat the market. But what you'll find is with more knowledge about trend lines, chart patterns, support and resistance, candlesticks, market profiles, Elliott waves, Fibonacci's, oscillators, relative strength, stochastics, and every other technical indicator out there. There's so many that you can't even mention them. What happens when you learn all of these is they start to conflict with each other. And so you've learned more, but you're actually trading less because you don't know what indicator to watch. Again, the key here is not about learning more. The key here is about learning more about yourself and learning more about how you interact with the market. And by learning more, you're actually setting yourself up to be more of a loser because, again, you haven't changed how you feel about the market. More importantly, you haven't changed your trade plan. You haven't changed your routines. You haven't changed your checklist on how you're going to integrate all this good knowledge. Again, Mark goes on to say that learning how to recognize and understand market behavior is good and it feels good. And you feel inspired to learn as much as you can about this so that you can become a winner. But you're setting yourself up to fail because you haven't learned how to integrate all of this new knowledge into your new system. And we'll talk more about that tomorrow. So if you're ready to, if you want to get the full version, the full 30-minute version of our video, you can get the podcast version, accendotraders.subscribepodcast.html. If you're ready to become a paid member and get our daily videos, again, not newsletters that you have to figure it out. Visual representation, video, techno analysis, trade plans. Here's how you can get it. accendotraders.com/video.html. And this week, my birthday is Tuesday, so I want to share the love. So anybody for this entire week from Sunday to Sunday, anybody who sends me a testimonial to info@accendotraders.com, I will give you an email back that will give you access for free for 14 days to our video trade plan. Again, if you send me a testimonial on how you use our videos, I will give you a free 14-day trial membership to our video trade plans. Again, send that email to info@accendotraders.com. Check out our blog. Our blog will also have the full version of our videos, and there's some great articles. We had one last week on how to trade opening gaps. As always, trade at your own risk, and I will talk to you guys next time.